ATHA Energy is a Canadian-focused uranium acquisition, exploration, and development company with a very large portfolio of properties, assets, and projects in some of the best uranium jurisdictions in Canada. We've got CEO Troy Boisjoli and Ryan Gaffney, Senior Vice President of Business Development, joining us today to discuss the company, its assets, with a focus on its flagship Angilac project. It's Wednesday, June the 25th. I'm Martin Gagel with Market Radius Research. Please remember, this is neither a recommendation nor investment advice. We're here to learn about the company. Troy, Ryan, thank you very much for joining us.
Hey, thanks, Martin. Appreciate you having us. And yeah, thanks for the opportunity. Looking forward to it.
Well, this is great. Like many others, I'm a big fan of uranium, and I think nuclear is an essential piece of our global energy portfolio that we all need. And I think ATHA is really a remarkable company with such large scale and breadth of high quality assets. And the fact that you have over 7 million acres of prospective exploration lands. We've got a lot of territory to cover, and I'm looking forward to hearing about everything. So why don't you guys take it away?
Yeah, perfect. Thanks, Martin. And I agree with you. Full stop. Obviously, we're very big proponents of nuclear energy. It's clearly being recognized as a major part of an energy transition. And you look at how uranium fits into that piece of it and into the story of nuclear energy. And we're entering into a uranium market right now that I don't think we've seen certainly in my lifetime. And there's a few key differences, I think, between the cycle that we're in right now versus cycles that maybe people can remember back in the 2006, 7, kind of 8 timeframe. And from our perspective, the biggest delta there, the biggest difference is on the demand side of the equation. You have to go back to probably the mid 60s, early 60s through the 70s, when the US and Western Europe was initially adopting civil nuclear scale technology to look at a period of time where we've had demand that's been stacking up like we see it right now. You couple that with the fact that there has been a distinct lack of investment in uranium exploration and development in a post-Fukushima environment. So since really 2011, and what we're left with then is a commodity that has a significant, severe structural supply deficit that isn't going to be solved or can't be solved by the assets that are currently in the pipeline for development, which as a net result then requires a significant amount of more exploration development to uranium to be discovered in order to even have a hope of balancing this market going forward. And then that's all on the macro and on the medium long-term view. And then from a shorter term perspective, the market on the uranium side, since I would say probably mid-April, when it came off of the spot price came off of $63 and started to trend north again from that point, has been extremely exciting. There's been a few really major, what we would consider major developments within the sector. The first being executive orders being signed by the U.S. administration, 4 executive orders that are committing to quadrupling nuclear power domestically within the U.S. You put that into perspective, right now they consume about 50 million pounds of uranium per annum, plus or minus. That would see them growing to 200 million pounds per annum, which is the size of the entire uranium market currently. Then in addition to that, last week, the Sprott Uranium Physical Fund announced a $100 million financing by open that day. They upsized it to $200 million US. And at the same day, on the same time frame, the spot price of uranium took the largest ever one-day increase of $5 on a day, one-day basis, jumped $5 in one day before spot had even closed that transaction, which closed last Friday. So long-term perspective, I don't think we've ever seen a uranium market as good as this. Short-term perspective, the upward pressure that we're seeing, the directionality of the spot price as a function of Spot's recent financing sets us up to have a very exciting summer through the fall and really reinvigorated this uranium sector. Now, that's a long-winded kind of intro into the macro side on the uranium space. How does ATHA fit into that? Well, ATHA as you mentioned, we are the largest uranium exploration company in terms of exposure to exploration properties across the best uranium jurisdictions in Canada, across the Athabasca Basin, the Thelon Basin, the Angilac Basin, and the Central Mineral Belt in Labrador. Um, as I get into the presentation, I'd just like to inform people that some of the statements I'm making will be forward-looking. Certainly visit our website to read the full details of the disclaimer on our corporate presentation. Now, how are we positioned relative to this cycle? We brought ATHA to market 2 years ago, off the back of 3.5 million acres of exploration property that was acquired during the downturn privately during a period of time when uranium was at $18, $19. Acquired the largest land position within the best uranium jurisdiction in the world, which is the Athabasca Basin. From our opinion, it is the leading jurisdiction currently, both in terms of grade and size of deposits. Now, from there, we grew. You mentioned on the intro that we were an acquisition company. Well, that might be past tense. We look at the acquisitions that we did to build up the platform that we have currently. We acquired 2 other companies in late 2023, which closed in mid 2024 of last year. We acquired Latitude Uranium and 92 Energy. The I'll get into the rationale and the build up of why we acquired those 2 companies as we talk about our assets. But overarching, it was through growth. It was maturing through acquisition and growing through acquisition. In parallel to that, we've had the opportunity to build a very talented team of uranium people over that 2-year time frame as well, in order to ensure that we're executing on our strategy, both in the field and from a corporate objective. So with that backdrop, I'll jump into some of the fundamentals. I'll maybe just highlight first our cap structure. We are, as I mentioned, we're only a 2-year-old company. We've raised Ryan, about $70 million into the deal to date. The vast majority of that at $1. The vast majority of that institutionally at $1. So as a function of that, we're about in the founder and insider held about 22 to 24% in that range. Institutionally, we're about 28 to 30%. Over and above that, some of the Sprott Junior ETF, URNJ, and other ETFs hold about 11% of us to 12%, depending on the day and the rebalance. The warrants that you see on the screen there, an average strike price of $1.48, and were converted over from the LUR transaction. And we have broad coverage across the street and good support in the capital market space. So from there, our assets, as I mentioned on the intro, we're across the Athabasca Basin, the Angilac Basin, which is where our Angilac project is, and we have full control over that basin. The Thelon Basin is a parallel basin, or analogous basin to the Athabasca. We have a very large land position in the Thelon Basin as well, and then in the Central Mineral Belt in Labrador. But for the purposes of today, I'll focus in on our flagship or our core project that we're currently working on, and that's our Angilac project. But before we get there, I'll just highlight a bit of the experience of the team, of the technical team, and of our corporate team. Myself, I'm a geologist by background, so I apologize for anyone listening in if I get a bit too detailed on some of the aspects. I've got Ryan here to help me stay at a level that's appropriate. I came up through Cameco Corporation as an exploration geologist, had the opportunity to act as a chief geologist at one of their operating mines. From there, I had the good fortune of joining NextGen Energy at the point of maiden resource, and as a vice president of project development, operations, exploration, and community, helped them facilitated moving that project forward from maiden resource through to feasibility. I'll highlight a couple more team members. Cliff Revering, he's our vice president of exploration. He's a gentleman that I worked with at Cameco for a number of years. He was while at Cameco, he was the chief geologist at Cigar Lake when Cameco was bringing Cigar Lake into production. We have a team of experienced uranium people that have either explored, developed, or produced tier 1 uranium assets throughout their career. On the corporate side, I'm joined today by Ryan Gaffney. He's our Senior VP of Business Development, 20 plus years of capital markets experience across the space. Ryan, do you want to give a bit of more detailed intro?
Sure. Yeah, 2.5 decades of capital markets experience as an executive and director of public companies. Was a big part, fortunate enough to be a part of an investment banking team that was highly active through the last uranium cycle, and joined ATHA 14 months ago. Very, very impressed with the size of the portfolio and opportunity for this sector. Moreover, the bench strength of the technical team, I think it's unprecedented in a junior uranium company, and provides us with a lot of optionality as to how to drive this forward.
Yeah, thanks, Ryan. With that, I'll get into the pipeline of projects. Moving from our generative stage exploration pipeline with our exploration projects across the jurisdictions that I mentioned. From there, we have a unique and interesting option within our portfolio, and that's a carried interest in a significant percentage of NextGen Energy's exploration portfolio across our SW1, SW2, and SW3 exploration projects. That's a carried interest right through to a feasibility stage, at which point it becomes either a participatory interest or converts to an NSR at our election. From there, we have advanced exploration projects. And when I say advanced exploration, I mean targeting wise. We've got a post-discovery stage project in our Gemini project on the eastern edge of the Athabasca Basin, and multiple projects across a corridor of the basin that we have advanced substantially over the last 18 months in terms of the maturity level and targeting level on those projects. And then leading the way within our portfolio is our Angilac project. Angilac is the reason that we acquired Latitude Uranium. It has a foundation with a historic mineral resource at 43 million pounds, 43.3 million pounds at an average grade of 0.69% U3O8. It's located in Nunavut in the Angilac Basin, in between the Athabasca Basin and the Thelon Basin. Angilac, again, reason we acquired Latitude. The reason we acquired it is significant amount of uranium mineralization in this basin that is highly underexplored. You combine those two factors, and that equals opportunity from our perspective. So we bought it not only for the mineralization that had been identified previous, but also for the growth potential that we saw in terms of growing the mineralized footprint, growing the scale of this mineralized system, and it's completely unconstrained. So what we did last year, once we acquired it, once we closed the acquisition, with our first program as operators of the Angilac project, is twofold. First, we stood up a 10,000 meter drill program, drilled 25 drill holes. Every one of those drill holes was drilled outside of the footprint of the current deposit, of the deposit at LAC 50. Widely spaced step outs from the deposit. The result of that drill program is we drilled 25 drill holes. All of those drill holes were mineralized, and expanded the scale of that mineralized system significantly. So 100% of the drill holes, 25 drill holes, were mineralized as a function of the program last year. And then in addition to that, in addition to stepping out, expanding the deposit, what we also did was a significant amount of generative stage exploration, because I'll point you to a couple things that are of unique interest here. One, the area of the deposit, the LAC 50 area, and the drilling and expansion work that we did in 2024 was all within this little black box. If you can see my cursor, can you see my cursor, Martin? I'll just confirm that. Yeah, perfect. That little black box sits right at the edge of this broader basin. That's the Angilac Basin. The green shapes that you see on the screen there are the project outline. So we've got a mineralized system that sits right at the edge of a basin. That basin is analogous to the Athabasca Basin, and it has never been explored. So we set to work with a program that was one focused on expansion of the deposit and expanding the footprint of mineralization, which was very successful. And then from there, we focused on expanding our information set and building out targets across the Angilac Basin. And I'll point you to a few things that we did here that really unlocked some of the regional scale potential of this system outside of that LAC 50 box. So LAC 50 sits right here. Deposit expanded. The deposit remains wide open, remains open on strike, remains open down dip, etc. From there, we flew an MMT survey or geophysical survey, which highlighted the subsurface geology below this basin. We did a significant amount of geochemistry work and compilation work that highlights a metal endowment at a broader scale here. All of the dots that you see on the screen are uranium mineralization, either from grab sample, outcrop sample, trench sample, etc., compilation of both radiometric and geochemistry sampling. The smallest dots on the screen, the red dots, are 0.1 to 0.5%. The larger, more prominent dots are 25 to 48 points or 47.8%. Very significant amount of uranium samples, frequency of uranium samples, metal endowment that we see around the edge and on the outside of this basin. The other thing that we did, in addition to the geophysics and the geochemistry, is we also did a detailed structural study. Uranium deposits are generally structurally controlled. And so it's important to understand the structural framework. So we pulled together a structural study. The results of that highlight a 31-kilometer long trend, structural trend cutting across the Angilac Basin. That structural trend was interpreted to be very similar, analogous to the trends that you see in the Athabasca Basin. So had us very encouraged. Moreover, what we see is in the rib area, which is on the western edge of this 31-kilometer trend, there's a series of historic holes that have structure, alteration, mineralization up to 5.6 in drill core. On the other side, 31 kilometers away, on the other side of the basin, there's a 9-iron trend. That 9-iron trend has mineralized outcrop samples across it, ranging from, say, 16 to 30% in narrow vein uranium mineralization on surface. Then there's a number of highly prospective areas within the basin that we identified through that compilation work. As recent as a month and a half ago, we mobbed in a ground geophysical crew. We outlined those areas with ground gravity and ground EM data that correlated very well to the structural model and to the underlying geophysics and the geochemistry. And as recent as 10 days ago, around 10 days ago, right, we started our drill program, 2-drill program, 10,000 meters with 2 objectives. The first objective was to expand and continue to expand mineralization within the LAC 50 deposit area, which is up in this box right here. The second objective clearly was to test unconformity and or basement associated uranium mineralization within this basin for the first time. Yesterday, we had the opportunity to announce the results from the first drill hole from the KU area. And on the first drill hole on the KU area, on a new trend that is a 31-kilometer long trend cutting across this basin, we intersected not only very favorable structural geology, brittle fault zones, brittle structure, alteration, but we also intersected 7 meters of composite mineralization downhole and discovered new mineralization for the first time along a 31 kilometer long trend. Zooming in on the result from the first hole along that 31-kilometer trend that we spent a year building up a target on, we intersected about 7 meters of composite mineralization as defined by the radiometric profile, the SINT and the probe profile. At 87 or 85.7 meters, we hit about a 2.7 meter interval of mineralization, 70 centimeters of that having off-scale mineralization above 10,000 counts per second within the radiometrics. What that tells us is not only are we seeing structure and brittle structure that is indicative of a Athabasca style mineralizing system. We're also seeing mineralization in the sandstone in the Angilac Basin for the first time, and mineralization over multiple peaks that is structurally controlled. In addition to that, we're seeing some significant geologic features. That's a 23 meter wide fault zone, brittle graphitic fault zone at the unconformity, which is showing 90 meters of displacement or offset, all features of a uranium system that you would say would be analogous to the Athabasca or features that you see within the Athabasca system. So needless to say, we're highly encouraged by the initial results at KU. The probability of intersecting mineralization in a uranium system with the first hole, based off of my experience, is very is low. And so the fact that we're hitting mineralization, alteration, and structure indicative of a sandstone system, a basin mineralized system, has us highly encouraged. And importantly, we're only 2 holes into a 10,000 meter drill program. So maybe with that, I'll move on from the Angilac project and just highlight at a very high level. We have a very large portfolio of assets across the Athabasca Basin in every past producing, current producing, and emerging producing district within the Athabasca. We have spent a significant amount of time and effort de-risking, building up targets using the same team, the same geoscience first approach that we used at KU that led us to a discovery there. That's across the basin. Carried interest I mentioned and touched on, and then as a long lead exploration tail within our portfolio, we also have a dominant land position within the Teton Basin, which is a mineralized basin in Nunavut, as well as the Central Mineral Belt in Labrador. Just to round this out, full stop. We are at an exceptionally compelling time within the uranium sector. It's a period of time where we have a true structural supply deficit. And I think the difference in uranium relative to maybe some other commodities is that structural supply deficit is the base case. And it's a base case based off of reactors that are already being built or in construction or being operated. We need more uranium, and the exposure that we have in ATHA has us very, very well positioned given the size and scale of the opportunity at Angilac and across our portfolio. And we're at the early stages of our company being able to execute across all of the metrics that we set out to execute on. About 20 minutes, Martin.
All right.
I'll throw it back over to you.
You said you were going to do it, and you nailed it. Wait, I'm impressed. You had a lot of ground to cover there, and you did it. I'd actually like to step back on a bit more foundational learning on the uranium market. With uranium projects, can you give us just a very quick primer on, like, I think most people know what a good grade and a bad grade is for copper or gold. Like, there's some, like, the scale from like Australian projects, I think it is, are very low grades, to Athabasca, which are high grades. Can you talk about what good grade is versus bad grade? And then as well, I guess, tacking on the back of that, what would be a small resource versus like a good sized one versus like a great one?
Sure. First on grade. Okay.
Yeah.
You talk about sandstone hosted deposits that are ISR amenable. You're talking about grades that are in the parts per million range. You're talking about 300 to 400 parts per million, or 0.03 to 0.04% U3O8. In the Athabasca grades, grades above 0.5%, 1%, some of the significant deposits that Cameco has would be in the multiple percentages, which are some of the highest grade, not some of which are the highest grade deposits in the world. And when you look at value of those deposits on a per ton basis, they would be some of the highest value deposits across any commodity in the world. Okay. If you used an average grade of, say, 0.7%, okay, just say for example, 0.7% uranium, that would be call it 16 pounds of uranium per ton of rock. Okay.
Yeah.
You can do some math on that. If you use $80, that's the current, call it $80 range is the current long-term price of uranium. That rock, if you back out, just to give you a sense of what that grade means, that's in the range of say $1,300 USD rock. That you look at gold projects, based off current gold prices, that's about 10, 11 grams per ton. So 10,
Okay.
11 gram per ton gold, that's very high grade, right? And
Yes.
so it doesn't take a lot of uranium to be a very high grade system. It's a very valuable commodity.
And then, so what would be a sort of a small, medium, and large uranium project?
Yeah. Hey, uranium projects, I think you have to, let's constrain that with projects within, say, undeveloped projects. We might even have a slide on this actually. Let's talk about size within relevant deposits within a peer group. Okay. Next Gen Energy, the Rook One project, very familiar with. I helped develop that from maiden resource right through to feasibility. It is, widely considered, I think consensus considered one of the best undeveloped mineral projects globally, not just in uranium. It has a total size of including measured, indicated, and inferred resources, total combined of about 336 million pounds. The Triple R deposit is next to that. Triple R has about 130 plus million pound resource in that range. Denison's Phoenix deposit in the 70 to 80 million pound range. You move forward from that, ISO's mineral resource is about 50 million pounds. Okay. When I look at deposits, I consider that 50 to 100 million pound range as being a large deposit. Anything over 100 million pounds at the grade profile that you're talking about, around that 0.5% or larger, I would certainly consider tier one in terms of scale.
Now, on the macro side of it as well, with the on the uranium pricing, there's the spot price, and then there's the contract price that's out there. It's unlike copper or gold, where there's a very liquid market. You kind of know what the price is. Uranium's different from that, with long-term supply agreements and so forth. Can you give us again a very quick primer on how that works? And when people look at the spot price, what should they glean from it? Because it's not, call it the gold standard of pricing.
No, it's not. And this is it's an important distinction and differentiation within the uranium sector. As you mentioned, the vast majority of pounds, around, around 20 to 30 million pounds in a 200, call it 190 million pound per annum market. A very small percentage of that trades on the spot market, on the short-term market. The vast majority of pounds are traded on the long-term or term contract market, where you're talking about contracts that are anywhere from 2 to 10 years in duration. Okay. The spot market is the thinly traded, more volatile sector of the uranium market, as evidenced by over the last 18 months, has came off of progressed from 55 to 65 to $106, and then as recent as April, steadied, traded back down to $63, and is now, as of today, off of April. I think the UXC, I think, just produced their update for today at $78. Okay, so thinly traded, as a function of being thinly traded, can be volatile. But really, the indicator for the health of the uranium sector, and where the supply demand fundamentals are at, is really the term market. And the term market has continued to tick up and continuously increase in the value in the term market since since the low around 2018. So it's trended very strong over the last number of years and continues to trend strong. And within that market, because most of it is a term market, the interesting period of time that we're entering into right now is that we're entering into a contracting cycle. where utilities are sitting with a large amount of demand that is uncovered under contract, and as a function of that, need to return back to a contracting cycle. And the upward pressure on the spot price of uranium is generally correlated to these points in time when utilities or ultimate end users need to enter into contracting cycles and secure their contracting needs for the next 2, 5 to 10 years. Puts a significant amount of pressure to the upside on the spot price of uranium. And so you look at a layering on of factors where you have a group like the Sprott Physical Fund, which just put 200 million into their balance sheet to deploy into the market. As of last week, bought 650,000 pounds out of the spot market. That represented, in the last 8 days, an $8 increase to the spot price of uranium as a function of that activity. And that's without even entering into this longer term contracting cycle that we're in right now. So, our view is that the upward pressure on the spot price of uranium is really strong. And that matters because uranium equities are correlated, strongly correlated to the spot price of uranium.
And that 200 million that Sprott raised, like in the gold market or copper market, that wouldn't move the needle, but that's enough, especially in the spot market where it moves the needle on pricing, right?
That's a great distinction. Again, it goes back to this is a small market. We're talking about the demand is 190 million pounds per year, 195 million pounds per year. That's increasing significantly, but that's where it sits. And a small portion of that is traded in the spot market. And so the spot market is thinly traded, and 200 million pounds or $200 million deployed into that market. Roughly 2 million pounds, if you want to back out a price, over 2 million pounds, is a significant percentage of that. Okay. And so, yeah, it is enough to be impactful within the spot market for sure. As evidenced by the movement that we've seen in the spot price since, a week ago Monday, an $8 increase.
And then another dynamic is it's energy companies like Constellation Energy or the nuclear reactor companies that are buying this. They can't run out of fuel. They need to keep fueling this. They've got their own long-term supply agreements where they got to provide energy to their clients, and they can't just shut these down. So that adds, I think, another very interesting dynamic and strong demand element. There's no kind of substitution there, especially in this market of increasing electricity demand out there. So I'm not sure there's a question there, but any comments to that?
That's a key factor that this market is inelastic, right? And there is no displacement. And you touched on I think a key point entering into a contracting cycle is that utilities need to manage inventories, and the contracting cycle has been pushed out. For a couple factors, and this is getting pretty nuanced and in the weeds within the uranium sector, but happy to do so. Contracting cycles have been started to get pushed out for two reasons. You go back 12 months ago, and it was really about U.S.-Russian sanctions. So there were sanctions that were going on between Russia and the U.S. A lot of the enriched uranium required for reactors comes out of Russia, not the supply side, but the midstream space within the energy sector, within the uranium energy sector. And those sanctions resulted in a low volume of contracting in 2024. And then fast forward into 2025, and you had tariffs. And so the tariff, the tariffs that were ratcheted on in the early part of the year resulted in pulling back in a low amount of contracting. So the only solution there, because there is no displacement within the uranium market, if you aren't contracting and you aren't bringing on new pounds into your inventory, the only solution there is to draw down inventories. And the last data point I saw on that, so the US with on average about 22 months of inventory. And if you think about the uranium fuel cycle, it takes about 3 years from from conversion, enrichment to fabrication. And so inventories are at low levels. You have a structural deficit on the supply side, entering into a contracting cycle where utilities not only have to return to contracting, but get back to replacement rate contracting, meaning that they have to backfill the amount of uranium that they use on an annual basis, plus looking at rebuilding inventories. So we're in a situation here where the spring is wound very tight, and the directionality, the asymmetry in this commodity to the upside, I think, is higher than at any other point that I've seen throughout my career.
We've talked a lot about the macro side. Let's talk more about ATHA. And I guess one of the challenges with looking at your company is you've got so many assets and trying to figure out how to value it, what to focus on. You've got the great macro background as a nice tailwind to it. I guess you've got a lot of sell side analysts covering you. How are they, or is it like, I guess, a sum of parts type valuation? How should an investor look at like the value of ATHA here?
Just a simple curve that maybe most people are familiar with if they're a resource investor. And this is just confirming you can see my screen there.
Yes.
Yeah. So in terms of where we're going and value of a project, I look at our most mature project. Our most mature project being the Angilac project has a 43 million pound historic resource at an average grade of 0.69%. Over and above that, we've expanded the footprint of mineralization there significantly over the last 12 months with 25 drill holes that stepped out and expanded mineralization across multiple fronts at LAC 50. That's the deposit. So the value for in our flagship project has emerged as the Angilac project because of the scale of the opportunity, both at LAC 50, and then you overlay what we just talked about, which is as recent as yesterday, a new discovery within a discovery of uranium mineralization within a basin along a 31-kilometer trend that has potential for, we've identified multiple targets along that trend. And on the first one that we tested, we hit uranium mineralization. So I think the upside there, from our perspective, the technical upside is tremendous. And so, as we move forward, the value that we see representing, ATHA is significantly being weighted towards Angilac. But in addition to that, what we represent is, continuation of torque and upside because of the work that we're doing across the portfolio and the exploration exposure that you get across the portfolio of assets, across the exploration projects within, the largest portfolio of exploration projects in the best uranium jurisdiction out there, which is the Athabasca, plus an emerging, what we feel is a very analogous jurisdiction in the Thelon Basin. It speaks to the runway that we have at ATHA, and it speaks to, that not just Angilac and progressing with our plans at Angilac as we continue to build that up, but we're backfilling and we're backstopping that with the portfolio of projects across those jurisdictions.
With your Angilac drilling program this year, you've got a lot of exploration work to do. Are you just trying to get a sense of where things are, just so that next year or at a future drill program, then you can sort of focus in on different areas? Because when you've got a big territory of exploration to do, there are a lot of strategic approaches you could take to sort of figuring it out. What is your strategy you're taking to this?
Yeah, maybe I'll answer that in two parts. Okay.
All right.
These are it is a strategy that ties together, but it's area specific. Okay. And the first part of that, if I zoom in a bit, would be on the LAC 50 trend itself. And really, what we did last year was we expanded this beyond LAC 50. So this is the area of the historic resource right here within the LAC 50 trend. We added drilling and results to LAC 48, to LAC 52, to LAC 54. We wrap models around those, and you look at the amount of open ground. This is, the drilling that we did, the mineralization that we intersected last year, is completely unconstrained in the LAC 54 trend. It's completely unconstrained in the LAC 52 trend, in the LAC 50 trend, in the LAC 48 trend. Okay, and that's a great, like, we're about, and it's unconstrained at depth. Okay, so we are in the process right now at LAC 50 of continuing to expand and work to expand that outline, that footprint of uranium mineralization. Because the idea here is to outline an area that gets us to a critical path that we believe we're very close to then kick over and start to look at doing, the next logical stage after this expansion stage becomes, delineation. You start to define and delineate the areas that you've expanded into. So 2024, 2025, expanding that footprint. Now, there's a couple logical reasons for that. You don't want to, for ourselves, we aren't going to enter into a delineation phase until we reach the edges. We have not yet, with 25 holes with 10,000 meters last year, we did not yet find the edges of this system. This year, we're continuing to expand, find the edges. Then the next logical phase subsequent to that moves into delineation type drilling. Now, that's a LAC 50 box. About, you look at the outline of the mineralization in those long sections, completely, about 30% tested, unconstrained on strike, unconstrained at depth, sits at the edge of the Angilac Basin. Now, with the drilling, and that's where I'll decouple the two things. So that's the objective within the LAC 50 region. Now, within this 31-kilometer long basin trend, the objective is discovery. The objective is driving discovery, and with the intention of understanding the scale from a regional perspective, because if we overlay and we look at, sometimes it's difficult, Martin, to get a true sense of scale of what you're looking at, particularly when you're looking at something on a screen like we're doing right now. And maybe I'll just take the opportunity and compare this and show the size of the Angilac project and the scale at which we're looking at to something that's relatively better known, and that would be the Athabasca Basin, or the Northeast Athabasca Basin. So this is purely for comparison purposes in terms of scale of the projects, what we're looking at. You look at the Northeast Athabasca Basin, an area that people know. And the scale of the Angilac project overlaid on top of that, or the Angilac project, down in the southwest here would be Cigar Lake. In the northeast portion of this would be Eagle Point, and this is the scale of the Angilac Basin and the Angilac project overlaid on top of that. As you can see, it's quite significant, and so when we look at the exploration potential along this 31-kilometer trend, that's a scale comparison to say, okay, we've got, the discovery potential within this 31-kilometer long trend where we have one drill hole into it and it's mineralized, we feel is very, very high. And so LAC 50 expansion, progressing that area forward to get to a tipping point, and that tipping point being moving into delineation drilling. That's the objective for this summer for 2025. The objective from an exploration perspective is make a discovery, discover mineralization one in the KU area. First hole did that, discovered mineralization in the basin, and then continue to build on that through, we want to discover deposits. That's why we're in this business. And being in an area that, like Angilac, with how the model's responding and being built up, we like our probability, we like our chances.
Some questions from the audience. here. Have drill results been received from Gemini, and what is the strategy there, as it seems to be ignored after buying a company to get it?
Yeah, hey, Gemini. I'll move into Gemini down here. Maybe I'll just zoom in a bit. Gemini is on the eastern edge of the Athabasca Basin. And we did buy 92 Energy for Gemini, as well as the exploration portfolio within that project. A discovery on the eastern edge of the Athabasca Basin, along a fertile trending corridor, which we like. The reality is that what we did last year was we took a portfolio approach to our drilling and to our exploration effort. And the reason we took, if you think back to 2024, we did 10,000 meters of drilling at Angilac, which we liked. In addition to that, then we did work within the Gemini project and continued to invest in our portfolio projects across the Athabasca Basin. And that exercise last year was intended to be able to clarify and give us an understanding of where our most investable, best opportunity is within that very large portfolio of assets. I think the fact that we have the ability to move Angilac forward, the project that we're seeing at Angilac, while having Gemini within our portfolio and having the focus be at Angilac right now in this given year, speaks to the strength of our portfolio overall. You look at any number of these projects within our portfolio, and I think that you could stand up an individual company with a very investable and attractive opportunity with any particular subset of our portfolio. And I think that speaks to the overall attractiveness to what we've built at ATHA, full stop.
All right. I guess stepping back to your larger corporate strategy, you have a ridiculous amount of uranium assets, or prospective uranium assets there. To develop them all forward would take a tremendous amount of resources. Your flagship projects are pretty robust. They seem right now. Should we investors view you as sort of developing the Angilac and maybe one or two key projects, and the rest of your portfolio maybe being a project generator where you'll de-risk them to a certain point and then spin them out? Because I don't think there's a conceivable way you could put a suitable amount of attention to each of the projects you have and the greenfield exploration that you have there. What is your sort of the longer term strategy and vision to developing all these uranium assets and potential assets?
Assets and potential assets. Yeah, you're 100% correct, Martin. It's a big portfolio, and as a function of that, well, first of all, okay, I'll back up into our decision making process. Okay, we've despite the size of our portfolio, we are not a land bank, and that might seem like a bit of an oxymoron with a company with as much exposure to exploration property across the jurisdictions that we have. We're certainly not a land bank. As a function of that, we've done work across our portfolio to mature it. The reason that we've done work across our portfolio to mature it, to understand the prospectivity, collect data, do the work, compare, rank, prioritize, assess, is to be able to drive forward into decision points. And those decision points are how are we going to allocate capital, and which projects are we going to allocate capital to as ATHA on a 100% basis, and which ones are we going to drive forward on our own. Which ones do we look to partner out on, or basically pull value from our portfolio forward through farm out agreements, earn out agreements, etc., which we have done with a couple of companies across the basin. And really what it shakes out to is we have a lot of optionality within our portfolio. And now as Angilac continues to grow and mature and naturally starts to represent, a disproportionate amount of the value of the company as a function of how the project is responding, then we have optionality within our portfolio. And then the question is incumbent to, the challenge and the opportunity for myself and our management team is how do we pull the value forward for our shareholders amongst a broader portfolio of projects. And there's strategies that we have in play there. One, think about the farm out agreements that we've done, but two, as we continue to mature, expect to see more from us on that front as we look at that opportunity to pull the value from our portfolio forward through a variety of different structures.
Okay, so how ATHA looks now, it's going to be evolving greatly over the coming years. It's
as we have been.
As we have
Yes.
been, we continue to evolve, certainly. But the key there is, that it's not a land grab or a land play. We like the properties. We've invested in those properties. We've acquired geophysics. They're at a much more advanced state than they were 18 months ago or 24 months ago, which now intersecting with where we're going within this uranium market, we're at a very good spot to be able to look at those projects as kind of on a standalone basis, et cetera, as more people continue to get interested in the sector, as risk capital comes back into the sector with the spot price of uranium going up, et cetera, gives us a lot of flexibility and a lot of optionality. And that's all geared towards how do we take assets within our portfolio, exploration properties, et cetera, and how do we pull value forward and how do we maximize exposure for ATHA shareholders to discovery.
With the Angilac project, that has a historical resource estimate on it, correct?
Mm-hmm. That's right.
I'm guessing, since you've got so much more exploration to do and there's so many unconstrained areas to explore, are you looking at updating that anytime soon, or are you going to wait to really figure out your way around the areas before you want to do a new resource estimate?
Yeah, we're not delineating this year. We're expanding the footprint of mineralization, as I described earlier. The historic resource is the historic resource. It's 43 million pounds at 0.69%. I look at our critical path right now isn't about going from historic to moving to updating and producing a current resource within that footprint of the LAC 50 deposit area. It is about expanding the footprint of mineralization beyond that till we reach the edges of that system. And then at that point in time, that triggers an option, the decision point for us to move forward with delineation work and to delineate those areas that we've expanded into.
Given the size of the historical resource, which I think from your prior comments, you would state that as sort of a medium-sized resource, and given your opportunities, I get the sense you're targeting like the potential for a tier 1 resource, 100 million plus.
Yeah, well, hey, without I won't compare kind of historic resources to current resources, but when I start to look out at the scale of the exploration opportunity that we see there, we believe that this system, even within just the LAC 50 box, has tier 1 scale potential. We've done work, that we're excited about, 25 holes into a system around LAC 50, all of them mineralized, expanding the footprint significantly. We like how it responded. We like how it continues to respond. If you look out and say what is the potential size of a system within the LAC 50 kind of area itself, we think that there is tier 1 potential within this broader system. And then that is over and above that, then you look at the Angilac system, the basin, and that
Yep.
those are distinct parts of this structural trend and of this project trend. That's a 31-kilometer long system that has one drill hole into it. And that drill hole is mineralized. So overall, we like the scale that we're seeing, the sum of the parts, the basin geology, the structure, the geochemistry on surface. If we instead of just arm waving over a section here, let me just reference this back to a map. You look at the metal endowment as a function of surface sampling here. Again, a combination between grab samples, outcrop samples, trench samples across the scale of the property. There's a lot of uranium in this system. There's a lot of uranium that has been identified on surface. Now our opportunity is to track down and understand where that mineralization has the opportunity to be localized in higher concentrations and high grades within that rib 9 iron corridor. And the step that we took as of yesterday is a very positive step in the right direction in terms of getting a hole into this thing and seeing mineralization in this basin subsurface.
We are approaching an hour. We need to start wrapping this up. I'm having really enjoying this. One last question from the audience here. Do KU drill 01 results warrant follow-up vectoring for a basement hosted deposit this summer?
Unequivocally, yes.
All right.
Resoundingly, yes. I'll maybe just couch that like, hey, if we wouldn't have seen mineralization there in the first hole, the results that we saw in terms of the structure in the sandstone, the structure in the basement, that large graphitic fault, even in the absence of mineralization, they would have warranted follow-up and continued persistent follow-up in the area because of what we saw in the geology. The fact that there's uranium overlaid on top of that, and 70 centimeters of off-scale mineralization, 7 meters of composite mineralization within the first test, unequivocally, absolutely yes.
Thank you very much. Any final thoughts or comments to leave viewers with before we wrap it up here?
Yeah, we've got 2 drill holes that we put out yesterday. 2 drill holes out of a 10,000 meter program. So I'd encourage people to stay tuned. Stay tuned as we continue to work on the project over the course of the summer. It's an exciting time with the upward pressure that we see on the spot price of uranium, with lots of results to come, and with a model and a technical team that's executing very well. So yeah, we're excited, and thank you for the opportunity to have a chat today, and to those who participated. Thanks for joining.
Troy, Ryan, thanks a lot. A lot of fun, very interesting. Have a great day, and hopefully we'll talk again soon and get some more updates. Cheers.
Yeah, thanks, Martin. Appreciate it.